Welcome back to Profit Playfield, where we break down the biggest market moves so that you can stay ahead of the game. If you're new here, be sure to hit that like button and subscribe for your weekly dose of stock market insights. This week was a roller coaster with record highs, cautious Fed minutes, and a rough Friday sell-off. Nvidia made headlines, Walmart's outlook sent ripples through the market, and UnitedHealth's DOJ Probe shook investors. Let's dive into everything that shaped the markets this week. So the week started off on Monday, February 17th, with it being President's Day, so the markets were closed, and it actually kicked off on Tuesday. On Tuesday, investors were cautious ahead of upcoming Federal Reserve minutes to follow on the next day. In key earnings reports, including Walmart's later in the week, overall sentiment was better than expected despite individual stock volatility seen throughout the market. Nvidia pushed over $140 per share again for the first time since the DeepSeek release and sell-off, massive AI sell-off that came a couple weeks ago. This relayed optimism ahead of the earnings call to be held in the next week on the 26th, not just for Nvidia to bounce back, but to soar even higher than originally projected. The S&P 500 edged up by about 0.2%, very modest, to finish at 6,129.58, surpassing its previous all-time closing high. So this is an all-time high S&P 500 hit this week. The Dow Jones Industrial Average barely moved, rising by only 20 points alongside the NASDAQ composite, which managed about a 0.1% increase. And Wednesday, it continued with being somewhat flat based on the news. So in the middle of the week on Wednesday, the Federal Reserve's minutes were released, confirming that federal policymakers had opted to hold interest rates steady amid signs of a rebounding inflation trend and ongoing uncertainties with Trump's tariff announcements and threats. With the minutes providing a clear signal of a wait and see approach, investors digested the details carefully going into the next day. The major indexes, which hit record highs the day before, showed muted volatility into Wednesday. It was pretty flat up and down. Traders appeared to be positioning themselves ahead of further economic data to come out in the week and corporate earnings to follow. On Thursday, February 20th, after the record-setting highs on Tuesday and the steadying Wednesday following the Fed minutes release, market sentiment shifted on Thursday. Investors grew cautious as corporate earnings and outlook revisions began to weigh on sentiment. In particular, several companies, most notably Walmart, reported a weaker than expected outlook, which dragged down their shares. Other stocks, such as Palantir, also slid as traders reassessed growth projections amid renewed concerns over supply issues and broader economic uncertainties. That being, DOJ is also going to take a look at the defense budget. As a result, major indexes, including the S&P 500, Dow, and NASDAQ, as previously mentioned, hitting all-time highs and staying steady, closed lower on the day, marked by a pullback after earlier gains. And Friday, to close up the week, Friday saw a broader, more pronounced sell-off that capped off the week on a negative note. The Dow, for instance, ended up posting its worst weekly performance since October, falling roughly 2.5% for the week. A series of negative catalysts contributed to the downturn. Most notably, UnitedHealth Group's shares plunged amid news of a Department of Justice probe into its Medicare billing practices. Tech stocks such as Tesla and Nvidia also experienced sharp declines amid a general shift toward a risk-off sentiment. Heightened concerns over stubborn inflation, tariff uncertainties, and disappointing economic signals spurred investors to rotate into more defensive positions as trading volumes spiked, leaving the week in negative territory overall. And into this next week, investors are very concerned, especially with Nvidia having a huge grasp. On the week of the 17th to the 21st, U.S. stocks were poor for the week ending February 21st. The S&P 500, as previously mentioned, fell quite significantly alongside the Dow. And of the items on my watch list, specifically looking at my portfolio, the top performers for the week were defensive stocks such as Schwab's Dividend, SCHD, up 1.51% for the week. The CVX, which is Chevron Energy Company, it was up 1%, but I had 9 decliners and only 2 advancers for the week. So out of my 11 holdings, kind of bad overall. There was, again, early optimism in the week with VOO, or the S&P 500, reaching all-time highs, 52-week highs, but then, of course, coming down by the end of the week by almost 10 share points. AIQ, one of my top ETFs for growth, also hit a 52-week high of 42.78 earlier in the week, but closed at 41.24. Still a good gain for the month, but overall on the decline. As you can see here, my defensive stocks performed the best, and my more aggressive technology stocks really changed down by quite a significant percentage. But it's pretty in line with a very, very red week across all industries seen here. And the net change by asset class, in my watch list, the stocks were down on average a net change of 3.5%. My ETFs were down 0.95%. More defensive than what we see with stocks, but at the same time, it was significant since it makes up the majority of my portfolio. And then looking at a map of my portfolio here, you can see Discover actually on here, it shows it performed better, but it actually did not. So Berkshire did not perform great, but it held pretty steady. Buffett's sitting on a lot of cash, so his opportunity cost is just benefiting as he's watching this market come crashing down a little bit. He's looking for an opportunity to buy. Or maybe he's not. Who knows what he's going to do with all that cash? He has a lot of money stacked up right now. But as you can see, the whole portfolio is pretty significantly down, especially when looking at tech and Meta. And these two big ETFs were down almost 2% each, for the S&P 500. And my AI fund, Nvidia, was down after getting over 140. And Google was down quite significantly as well, continuing its decline alongside SoFi and Amazon amid consumer sentiment with Walmart. Amazon is actually said to be, I'm thinking long term here, Amazon said to be outperforming Walmart in profitability now, and its sales margins are continuing to grow, exceeding Walmart. So it'll be interesting to see how this encompasses in the future, with Walmart being the largest consumer retail company in the United States. Thanks for watching. If you enjoyed, please leave a like and comment below what you think the market will do this week. Subscribe to Profit Playfield for more market updates. I'll see you next week.